AQN just announced that they cut their dividend by almost 45%. The stock is down almost 6% this morning in the pre-markets. Good morning, guys. Today we're going to be talking about Algonquin Utilities, ticker AQN. They just announced that they cut 40% of their dividend. My quick opinion on the stock is it is going to be a falling knife. So guys, please be careful when especially if you're trying to time the bottom of this stock. The best thing to do is dollar cost average. It is going to be going down a lot. There's a lot of sellers in the market, especially in the pre-market. So just be careful when you're buying. Don't go all in. I'd slowly buy in and take this opportunity. This is some quick facts I'm going to read out. The dividend was cut almost 45% from 18 cents to 10 cents quarterly. Yield was down from 10% to almost 6%. So the annual dividend went from 0.72 cents to 40 cents. AQN continues to pursue Kentucky Power, and this is good for growth, but I think it's very bad for debt. AQN to sell $1 billion of assets, and it's going to be used to pay down debt. It's good because they will pay down their long-term debt, but bad because they'll have less return on their assets, especially because they're a renewable company and they did acquire a lot of renewable assets. And the good news is earnings are expected to be 0.55 to 0.61 for 2023. That does show signs of profitability, but again, guys, we'll have to wait and see. And also earnings, AQN is suspending their DRIP, so the dividend reinvestment plan. I don't really care about this because I just reinvest the dividends manually anyways, but this could be bad news for some retirees. And that's just some quick facts, guys. Okay guys, so here is the article, and it was uploaded today. It was posted at 7 a.m. Obviously the market hasn't taken this lightly. It's already down 3.78%, 2.7. So before it was almost down 6%, but let's see what happens when the market opens up, and let's see how everyone reacts to the dividend. AQN continues to pursue Kentucky Power. AQN will be suspending its dividend reinvestment plan. Like I said, I don't care about this. AQN expects adjusted net earnings. So nothing special yet, other than what I've already said earlier. Okay, guys, but this is just its article that they release, and we'll have to find out more when they release their conference call today at, I believe, 8 a.m. So guys, looking at AQN stock, its trailing PE is 101, which is pretty high, but its forward is 10.46, and this is if the earnings come out great this year, and they are, analysts and AQN are predicting that. They're forecasting great earnings. So let's see if we actually get a fair value for this stock based on its PE. Now we're going to be doing a breakdown on this stock, and as you guys already know, it does have huge debt compared to its cash pile, which is kind of scary. But also, this is a utility stock, so it's normal in the markets. But what I don't like is its leverage free cash. So it sucks because they're paying their dividend. They use this money to pay their dividend, but they're also putting it towards their growth. So in the short term, it does make it a very risky stock, and it has proved that. And now we're seeing AQN 2.7%, negative 2.7% in the pre-market after they announced their dividend cut. Hopefully the stock improves as they have their conference call. Now we're going to be looking at AQN, and we're going to be analyzing it on Simply Wall Street. Link is in the bio if you want to try out this app. It is very great. So as you can see over here, it has great future potential. It has an all right dividend. Okay, it's not going to be good anymore after they cut it. But as you can see, their health is not good, and that's mostly because of these risk analyses right here. Are they in a good financial position? Interest payments are not well covered by earnings. Well, maybe now if they start selling their assets, this could improve. Is their dividend sustainable? No, it is not sustainable, and that's why they just cut it by 40%. Do they have high quality earnings? I guess it's failed, but it's in the orange, so it's all right. Profit margins improved, lower than last year's profit margin, which was 26%. But this is because of macro environments. Okay, we are in a bear market, we are in a recession, so that makes sense. Now let's look at valuations. All right, let's see if this is at a fair value. Their score is 2.6, but let's take a look over here, guys. It says the current price $9.95 is 50% undervalued, and the fair price is $20. I guess it's a fair value, but I see the stock going down to $6 maybe now, based on selling. Future growth, it does have a potential for a huge future growth, guys. Not specifically revenue wise, but earnings versus market. It's a given. We all buy the stock because of its future growth potential, right? The only thing that's scary is its financial health, debt level, long-term liabilities, short-term liabilities, debt coverage. It is reducing its debt and interest. So let's see what happens. And dividend. Okay, obviously this is the big part. This is why everyone buys the stock. This is now going down to 6%. So let's see what happens, guys. What else can we look at over here, guys? Recent insider transactions. So the last time a stock was purchased was November 27, $5,000. The big purchase is over here at almost 300 grand. Oh, November 13. This was by the CEO, 1.5 million. Insiders are buying, but this was again in November, so almost 2 months now. Let's see what they do after this conference. My final thoughts, guys, are wait it out on the sideline. That's personally what I will be doing. I'm going to be buying, but I will be waiting. This is a great company, especially for long-term growth and a great dividend payer. We just have to wait it out and see what happens after this recession. Other than that, guys, make sure you guys like, subscribe, and comment, and hope you guys enjoyed the video, and good luck.